Did you know that the secret to building wealth through investing is actually hidden in a little book? Stick around, and I'm going to reveal the 7 key takeaways from the book that can transform your investment strategies and skyrocket your financial future. Welcome back to Cash Flow Seeds, your one-stop channel for investing, financial freedom, and wealth creation. I'm your host, and today we're diving deep into the pages of Pat Dorsey's legendary book, The Little Book That Builds Wealth. Before we get started, remember to comment, like, share, and subscribe for more life-changing content that will help you become wealthy and financially independent. In this video, we'll uncover the essence of Pat Dorsey's investment wisdom, giving you the tools you need to make informed decisions and achieve exceptional returns. We'll break down his knockout formula into 7 powerful takeaways, and you'll discover how to apply these principles in your investing journey. Are you ready to build your wealth? Let's go! The power of economic moats. The first key takeaway from Dorsey's book is the concept of an economic moat. Like a medieval castle protected by a moat, companies with wide moats enjoy a significant competitive advantage that helps them fend off competitors and maintain profitability. Warren Buffett once said, "In business, I look for economic castles protected by unbreachable moats." To find companies with wide moats, look for brand loyalty. Companies like Apple or Coca-Cola have built powerful brands for which customers are willing to pay a premium. Network effects. As more people use a platform like Facebook or Airbnb, its value increases, attracting even more users. Cost advantages. Companies like Walmart or Amazon have achieved economies of scale that allow them to undercut competitors on price. The importance of return on invested capital, ROIC. The second key takeaway is the importance of return on invested capital. Return on capital measures how efficiently a company uses its capital to generate profits. High return on invested capital indicates a quality business that can reinvest its earnings at attractive rates. As Charlie Munger said, over the long term, it's hard for a stock to earn a much better return than the business which underlies it earns. Look for companies with a consistent history of high returns on capital, which indicates a durable competitive advantage. The value of free cash flow. Pat Dorsey emphasizes the importance of free cash flow, the cash a company generates after accounting for capital expenditures. Free cash flow is a more accurate measure of a company's financial health than earnings, as it reflects the actual cash available to pay dividends, buy back shares, or invest in growth. Peter Lynch once said, "Free cash flow is the ultimate measure of corporate success." Therefore, when evaluating potential investments, look for companies that consistently generate positive free cash flow, indicating strong underlying business performance. The significance of organic growth. The fourth key takeaway is the significance of organic growth. Organic growth comes from a company's core operations and is not dependent on acquisitions or financial engineering. Companies that grow organically are able to increase sales, profits, and market share without taking on excessive debt or diluting shareholder value. Organic growth is a sign of a healthy, well-managed company with a strong competitive position. As Terry Smith once said, organic growth shows that a company can grow from within, relying on its own resources and strengths. When evaluating potential investments, look for companies that consistently achieve organic growth, which indicates a strong underlying business model and long-term value creation potential. The power of diversification. The fifth key takeaway from Dorsey's book is the power of diversification. Diversification is spreading your investments across various assets to minimize risk. By investing in a range of companies with different economic moats, industries, and geographic exposures, you can reduce the impact of any single investment on your overall portfolio. As the legendary investor Peter Lynch said, diversification is the closest thing to a free lunch in investing. To maximize the benefits of diversification, Allocate your capital across multiple high-quality companies that exhibit the characteristics we've discussed so far. The importance of valuation. The sixth key takeaway is the importance of valuation. A great business is not always a great investment if you overpay for it. So to achieve attractive returns, buying stocks at a reasonable valuation is crucial. Benjamin Graham, the father of value investing, famously said, "Price is what you pay, value is what you get." To avoid overpaying for stocks, look for companies trading at a discount to their intrinsic value, which can be estimated using valuation ratios such as price to earnings, PE, free cash flow yield, or other valuation methods like the discounted cash flow model. The power of patience. The final key takeaway from Pat Dorsey's book is the power of patience. Successful investing requires a long-term perspective and the ability to resist the urge to constantly trade in and out of positions. Patience allows you to ride out short-term market fluctuations and reap the rewards of compounding over time. As Warren Buffett once said, the stock market is a device for transferring money from the impatient to the patient. To achieve long-term success, remain focused on your investment strategy, keep your emotions in check, and allow your investments the time they need to grow and prosper. In summary, Pat Dorsey's The Little Book That Builds Wealth provides valuable insights into the world of investing. By understanding and applying the 7 key takeaways from this book, you can make smarter investment decisions, identify high-quality businesses with durable competitive advantages, and ultimately build wealth and achieve financial independence. Now that you've learned these powerful investment principles, it's time to put them into action. Remember to comment below with your thoughts on these takeaways, and let us know how they've impacted your investment journey. If you found this video helpful, please give it a like, share it with your friends, and subscribe for more content that will help you become wealthy and financially independent. Remember, the seeds you plant today will determine the cash flow you harvest tomorrow. Happy investing!